Assalamu alaikum. Hello, everyone. Welcome to the ATX revision session. And basically, it's our day 3. And can you please confirm, am I audible to all of you? Is my voice clear? Okay, thank you. Let me introduce myself. My name is Rana, and I'm in teaching profession since last 9 years. And my core teaching areas are taxation, advanced taxation, and financial reporting. Apart from teaching, I worked at KPMG's taxation department for 4 years. And welcome to Rana, welcome Hussein. Hopefully, all of you are preparing well for your exam. And also, you have been part of the last 2 days. I guess you were there and you attended the last 2 sessions. Yes or no? Okay, don't worry if you haven't attended the last 2 sessions. Taruna, still you can watch the videos which are available, which have been shared in the groups. Okay, welcome Eva. Okay, and the first day 1 and day 2, the first 2 sessions being conducted by Sir Kambar Raza. That's my co-tutor. And the remaining 2 days will be covered by myself. And as Sir Kambar started discussing the practice exam 3 from the ACCA Global Practice Platform, and in 2 days, basically along with the discussions, along with the different discussions, question number 1 and question number 2 from the practice exam 3 have also been covered in the last 2 days. So as it's our day 3 and my agenda for today's discussion, don't worry, my dears, we'll be sharing that related stuff with you guys. Don't worry, we'll be sharing the links on also the previous 2 days lectures. Don't worry about these things. Okay, so as Sir Kambaraza has already started in the day 1 and day 2 the practice exam 3, so I'm just continuing the same thing, and the agenda for today's discussion is question number 3 from this past paper. Before moving on, let me quickly recall the relevant areas which are tested in this question. I repeat, before moving on to the actual discussion of the past paper question, let me quickly recall the relevant areas which are tested in the question number 3 of practice exam 3. So basically, in this question, you would be finding 3 different requirements, A, B, and C. One of them is pertaining to value-added tax, and second one is pertaining to corporation taxes. And in corporation taxes, a related concept is tested. Like if you remember, there is a concept which is research and development. So for corporation taxes in the part B of this question, research and development is tested. And in requirement C, examiner has asked about the tax implications for 2 persons, for employee, and for employer for company. So basically in part C, examiner has asked tax implications for employee and for company as well. Now, what exactly is the requirement under part A? What exactly are the things under part B and part 2 and 3? I will be showing you the relevant questions in the PDF form as well as on the ACCA practice platform. Don't worry about these things. We have the same question in the PDF form, and also I have opened the question from the CBE practice platform. But As I told you before moving on, I will be discussing the relevant areas, the general discussion, the general laws, taxation rules, which are pertaining to these three requirements. Then we shall be applying the knowledge to the specific scenario which is being tested in question number 3. So are you guys clear with the agenda of the discussion? I want a confirmation from your side. Are you guys okay? Are you clear with the agenda of the discussion, what we are going to do now? Okay, good enough. Thanks for your quick replies. Thank you, Hussein. Okay, I have just marked number 1, the requirement which is pertaining to value added tax. I have marked number 1, requirement which is pertaining to value added tax. For a business, whenever a business is started, that business has to register with VAT. And now the registration can further be divided into 2 types. If we talk about VAT registration, so VAT registration is further categorized into 2 categories. Number 1, compulsory registration, and number 2 is voluntary registration. So as we are talking about VAT registration, a business, if one can go for voluntary registration with VAT, but when when the turnover of the business will exceed 85,000 pounds, in that situation, a business would be required to compulsory register for VAT. Furthermore, if you remember, there is a concept named as pre-registration input VAT. Pre-registration input VAT. If you remember, at time of registering with VAT, a business is allowed to claim pre-registration input VAT with respect to goods as well as with respect to services. Before registration, a business is not allowed to claim any VAT paid prior to the VAT registration because business was not registered with VAT. But now, as the business is VAT registered business, and HMRC allows that business to claim pre-registration input VAT. I'm actively looking at the chat box. Can you please tell me the conditions for claiming pre-registration input VAT with respect to goods as well as the pre-registration input VAT in respect of services? What are your points? I'm looking towards chat box. Very good. Very good. All of you are answering correctly. For goods, there are 2 conditions. Goods which purchased within last 4 years prior to the registration and or also existed, and which the goods which are also existed at registration time. I'm not completing it formally. I'm just writing the relevant points. For goods, there is a condition that any goods which purchased in past 4 years prior to the registration and also existed at time of registration, then pre-registration input VAT can be recovered in respect of goods if both these points are met. Whereas as far as services goods input VAT is concerned, it for services, as you guys mentioned, as you guys highlighted, any services which acquired within last 6 months prior to the registration on such services, if a business has paid any VAT, that VAT can be claimed at time of registration. So basically That's an advantage of VAT registration. Why it is an advantage of VAT registration? Pre-registration input VAT can be claimed at time of registration. That is a VAT registration advantage. Why it is advantage? Let me also conclude this point as well. Till the time the business was not registered with VAT, cannot claim VAT. But now, as the business is a VAT registered business, so business can claim its input VAT from now onwards, and also any VAT which is paid prior to the registration, that is also allowed to be claimed in the form of free registration input VAT. So that is a VAT registration advantage. Pre-registration input VAT can be claimed. Now let me show you the first condition. I'm not going to read the scenario because we are actually basically planning the things with respect to the question number 3, which is there in the practice exam 3 of the ACCA global practice platform. As we divided the questions requirement into 3 types, and I'm discussing the relevant area, so I have discussed the points with respect to the value added tax. That is the first requirement in the question for 6 marks. Let me show you the question requirement. You may easily get 6 marks if you just remember these points. It's not much difficult. The VAT requirement in this question is somehow very easy, and these are easy marks to gain. Only these things are to be discussed in relation to the scenario, and that's not much difficult. You will see, first of all, read the requirements very carefully, and then go to the scenario, link the requirements to the scenario, and try to drive your relevant points while answering the question. So that is basically the planning to attack questions. Do not go for scenario at first instance. First of all, just read the requirements, and then by keeping these requirements in mind, then you have to carefully read the scenario and try to extract the relevant information which can be used while answering part A, part B, or part C of the question. So as requirement A is for 6 marks, advice D limited on the implications for the recovery of input VAT of registering for VAT with effect from 1st April 2023. We don't know when the business is started, but we know one thing, that the business is getting VAT registration from this time when it will be compulsory to do so. It means business didn't get voluntary registration. There is a point in time when a business is compulsorily required to get VAT registration, and explain why it is beneficial for the company instead to register voluntary with effect from 1st July 22. We don't know about this date, on which date what happened, we don't know for the time being, but examiner is asking you what is the advantage, what is the benefit, what is the good thing for a business if business get voluntary registration on 1st July 22 instead waiting for the compulsory registration on 1st April 22. As I told you over here, getting VAT registration, business can claim input VAT exactly from the date when the business is registered for VAT. Till that time, before that time, as a business is unregistered and cannot be claimed VAT. So before VAT registration, input VAT is treated as an expense because company cannot recover it. But once the business is VAT registered, the input VAT can start be claimed. So it is no more expense, no more cost for the company. So basically it's an advantage for the business. There is clearly mentioned that calculations are not required for part A. You just need to talk about the tax implications. And one important thing, if you are reading this requirement and you are looking at 6 marks, these are very easy 6 marks, then you start writing the journal points. And if you have written like, in pre-registration input VAT can be claimed in respect of goods which purchased within the last 4 years and also existed at the time of registration, and if any service is acquired within the last 6 months prior to registration, if you are writing the journal points, you are going to get nothing. These are the journal points. You have to link these things, you have to link these things with the scenario, and you have to answer, you have to write with relation to the scenario. You should not write the journal points, right? So these are the basic point, the journal points, but we shall be linking these journal points to the question specific scenario. Are you guys okay with the things discussed till now? If you have any unclarity, any query, you may please raise your voice. And if you are okay, do let me know. Please write in the chat box, then we'll move forward. As said, Jamil, can you please tell which thing is not clear so I can repeat that? Pre-registration input VAT can be claimed at time of VAT registration. The condition for goods is different. The condition for services is different. If any goods purchased within last 4 years prior to registration and also existed at time of VAT registration, on such goods, a business is allowed to claim pre-registration input VAT. And as far as services is concerned, any services which a business acquired within the last 6 months prior to the registration and have paid any VAT, so that VAT can be claimed now at time of registration uh, to the extent of the services acquired within the last 6 months before registration. So basically we discussed the journal point with respect to that. Now moving towards the second requirement which is there in the question, and as I told you in part B of the question, the second requirement is pertaining to the corporation taxes, and the specific requirement is pertaining to research and development. So let me discuss the relevant points first. If you mark the second one, the second requirement of the question is pertaining to the research and development expenditure. For research and development expenditure, we should know about the status of the company. If a company is a small company, the treatment is somehow different. And if a company is a large company for R&D purposes, then the tax treatment and the implications are different. But in the specific scenario, there is a small enterprise. Now, I'm going to further discuss the research and development implications for small companies. It's a quick recap of the knowledge from the relevant area. Then we shall be applying the knowledge to the question specific scenario. Yes, the status of the company will be clearly mentioned in question for research and development expenditure. Whenever there will be any case or scenario, the status of the company will be mentioned very clearly. Don't worry about this thing. Research and development implications for a small company. If you remember, by the way, if a company for business is doing research and development, so is that a good thing or a bad thing? The first question. Then we will come to know why the HMRC is basically why HMRC wants to incentivize the companies who engaged in research and development activities. That's the secondary discussion. The primary discussion is about the research and development expenditure. If a business is doing R&D, so is that good for company, for business, as well as for economy? Answer is good. Your answer is perfectly fine, good and cost efficient, because by doing research and development, a business, a company basically takes multiple innovations, try to innovate new products, new methods and manners, which may result in cost, which may result in increased efficiency. Different objectives can be achieved. Your answer is also fine. Good. Faisal, you are writing good. After research, the company can find innovative ways for being cost effective, less polluted work. Yes, there could be multiple reasons. So if a business is engaged in research and development thing, at the same time, HMRC wants to incentivize that business. And how HMRC is basically incentivizing small enterprises if they are incurring any research and development implication. If you remember from the knowledge, 130% additional expense or expenditure can be deducted in the calculation of taxable profits. It's not 130%, it's basically 130 additional expenditure. It means effectively, if we conclude, if a company is basically incurred 100, 130 of 100 will be 130% of basic cost incurred is 130. So in fact, company basically incurred an amount of 100, but as per this statement, 130% additional expenditure. So that is 130% additional expenditure on the cost incurred. In fact, 230 can be deducted in the calculation of taxable profits. So basically 130 is the additional expenditure allowed for small companies. And if other way around, we can say that company would be deducting 230% of the expenditure amount. Are you guys okay with this thing? So how HMRC is incentivizing this small company? If a small company is incurring any research and development expenditure, 130% of the additional expenditure can be deducted in the calculation of taxable profits. How the company is getting incentive here? Because as more expense is deducted from the profits, lower the profits, lower the corporation tax liability. If an increased amount of expense is deducted from the profits, so profits are going down. If profits are going down, then the related corporation tax liability is also going down. So this is how a small company is getting incentive from the company. So they are allowed to deduct 130% additional expense from the taxable profits, and hence reduction in the corporation tax liability. But an important thing to bear in mind, this additional expenditure should be the qualifying expenditure for research and development purposes. What exactly do you mean by this qualifying expenditure? What does it mean? Let's say if two assets are purchased by a company which is involved in research and development thing. Yes, 130% additional expense of percentage of research and development. Your statement is right. I assume this 100 as actual cost incurred on research and development. 130 of the actual cost incurred, 130% is becoming 130 of the actual cost incurred 100. Then in fact 230 amount is basically deducted as an expense. I'm giving you the example. What exactly do you mean by this additional expenditure? So the qualifying expenditure is considered only. Let me give you an example. Let's say a business which is involved, a company, a small company, let's say, which is involved in research and development activities. And if that company acquired basically two different assets, but one of them is not used in research and development activities, and the other one, the second asset, is purely purchased with the intention to be used in the research and development activities. So what you think? Is the purchase of both assets going to qualify, going to consider as qualifying expenditure for research and development purposes or not? I repeat my question. Is the purchase of both assets will be considered as qualifying expenditure for research and development? Answer is no. Only one. Why? Because we shall be taking the asset which is directly attributable to the activities which are pertaining to the research and development. Okay, all of the participants answered correctly. Now let me change the scenario. Please listen carefully and then decide accordingly. Let's say now I'm just creating a scenario and it is directly linked to your question which I'm going to attempt in today's session. Let's say a company purchased two assets. Both are going to be used in research and development activities, but one of the asset is a new asset and the other asset is an old asset. What you think? Both assets will qualify for research and development, although both are being used for R&D activities, but one of the asset is new and the other asset is old asset. What do you think? What about others, please? I want to listen from you, even if you don't know, as Faisal told that he has no idea about it. I think both new asset will qualify, new only, both will qualify, only the new one. Okay, mixed answer. I'm getting the mixed answer from you guys, but please be clear with one thing, that if new asset is purchased and if an old asset is purchased, if both are being used in research and development activities, only the new one will qualify for this 130% additional 130% additional expenditure. Although the other asset will be considered as an expense, but that expense can be claimed to the actual amount, not the 130% of the expense incurred. So only we are only talking about 130% additional expense. So on the second hand asset, that will not qualify for 130% additional expenditure. Although the cost of the asset purchase will be deducted, that will be qualified for capital allowances, but that specific old asset will not qualify for 130% additional amount. One more point to highlight, if with respect to research and development, if you remember, if an agency is doing some subcontract work, so which cost is allowed? 100% amount which is given to agency, or there is a rule of 65%, I guess. What do you think? Wow, all of the answers are perfectly fine. When there is any agency cost is involved, so only to the extent of 65% the expense will be allowed. Now, keeping all these things in mind, we can go towards the requirement number B. And in second requirement, which is also for 6 marks, requirement is explain the corporation tax treatment. Whenever we talk about professional level papers of ACCA, these are not mainly about the calculations. In part A, you can see the word implication is there. In part B, you are having explanation. So, and for part A, it is clearly mentioned that no need to calculate anything. But as far as the explanation is concerned, so in explaining the things, you might be calculating few values, but your answer tune should be in paragraph form, should be in point A, B, C, and D. It's not like that you are just preparing the calculations per forma and all that. No, because in all of the professional papers of ACCA, normally if you have attempted any other paper, so uh, you know this thing that in professional level papers you need to explain the things. You have to write your answer in the bullet forms, in the paragraph forms, in a discussion manner. You have to elaborate your answer. So explain the corporation tax treatment of the research and development expenditure of 353,000. The actual amount is incurred 353,000, and based on this discussion, it means instead of this 100, the actual expenditure is 353. Without any doubt, that 353,000 is an allowed expense which can be deducted from taxable profits in the calculation of taxable profits. But apart from the actual cost, we should also consider which cost is eligible for 130% of the expenditure. So the basic cost incurred is 353,000 to be incurred by Dent Limited in the year ending 30th June 23, and on the assumption that Dent Limited registered voluntary for VAT with effect from 1st July 22. Calculate. Now you have to explain the things. And now, furthermore, you have to calculate the amount of the deduction which will be available in respect of this research and development expenditure for corporation tax purposes. An amount which is directly given 353, that is the actual cost incurred on research and development. Furthermore, you have to follow all of the tax implication with respect to 130 qualifying expenditure. Then conclude your answer and calculate the total amount of the deduction which will be available in respect of the research and development expenditure for corporation tax purposes. There is a relation between requirement A and B. In requirement A, business was getting VAT registration on 1st April 23, and also an advantage is asked if business get voluntary registration from this date. But for second part, you should assume that the limited registered voluntary for VAT with effect from 1st July 21. Rather, following the actual VAT registration date, you have to assume that company voluntary registered with VAT from this date. And this requirement is also for 6 marks. Now, moving towards the part, okay, before moving on, before the discussion of the requirement C, please do let me know if you guys are, if any one of you are unclear with this discussion. So please do let me know. If you guys are okay, then we can move forward and can start discussing the part C, the third part of the question. I'm waiting for your answers. Okay. For part C, as I just wrote tax implications for employer, for company, let me give you a quick recap. Let's say when there is an employee, tax implications, these are the general points. These are the general points because we don't know the actual scenario for the time being. So we are talking about the tax implications for employee. Apply the situation on yourselves. You will remember it correctly then. Tax implications for employee. Let's say you are working in UK in any company. If you are getting salary, benefits, these are the general points. Again, on salary, for surely both will be calculated, both will be used in the calculation of income taxes, but salary is part of gross cash earnings. Salary would also be considered as gross cash earnings, and on gross cash earning, employer is required to pay class 1 employee NIC. On the benefits amount, benefits are, if there are taxable benefits, on taxable benefits, class 1A, but who is going to pay it? employer, class 1A employer NIC is applicable. Furthermore, if we talk about tax implications for company and for employee, so let me also write few things with respect to the company, for employer or company. If a company is giving any salary, if a company is giving any salary or benefits to employees, salary is allowable deduction. For the company, benefits are also an allowable expense for the company. Furthermore, on the salary amount, there is also class 1 now. It's class 1 employer NIC is payable by company, but this is also an allowed expense for the company. On the benefits, as we marked here, class 1A employer NIC is applicable on the amounts of benefits provided. Furthermore, if you look, all of these things being allowed expense, all of these things will be deducted. These will be deducted and hence what will be the impact on the profits, and hence profits will go down. Ultimately, the corporation tax liability will also go down, as all of these are expenses for a company. So if all of these are expenses for a company, so when the expenses are increasing, profits will go down, so the corporation tax liability will also go down. Read the third requirement, which is for 8 marks. In requirement C, state the income tax implications of the receipt of lump sum payment for Alina, which is an employee. That's a separate thing in part C. And calculate the after-tax cost for Dent Limited. The second half of the requirement is pertaining to the company, is pertaining to the employer. And calculate the after-tax cost for D Limited in respect of the lump sum payment, provision of computer, and the temporary living accommodation to employee in its year ending 30th June 23. Note, you should ignore VAT in this part C. Okay, ignoring VAT. Now, let me show you again. One thing is for employee. The other 3 things are to be discussed for company. What are these 3 things? For a company, you should talk about the after-tax proceeds in respect of lump sum payment, number 1. Number 2, the computer given to employee. And number 3 thing, which is temporary living accommodation given to employee. So again, requirement C is divided into 2 phases. We shall be answering requirement C into 2 phases. Number 1, implications for person, for employee on the receipt of lump sum payment, and for company, we shall be answering with respect to company 3 things: the lump sum payment, provision of computer, and temporary living accommodation. And interestingly, we should conclude a thing for company, which is the after tax cost. What does it mean? Let me show you from here. You can see on one hand, company is paying the salary to employee, providing benefits to employee. These are the costs. On one hand, company is like outflowing or incurring costs for employee. On other hand, these costs will be allowable expense and will result in a reduction of the corporation tax liability. So it means we have to calculate 2 things. What is the increase in cost, take that amount, and a reduction in corporation tax liability due to this cost, because this cost is an allowable expense. So reduction in corporation tax liability, this amount is basically asked in requirement C, after tax cost for delimited. So this will be calculated, that will be after tax cost. First of all, the total cost incurred by the company. Incurring this cost will result in a reduction in the profits, so resultingly reduction in corporation tax liability. So finally, we will arrive at this figure after tax cost. So that is required in part C. Anything to ask? Any unclarity, please? And importantly, this requirement C is for 8 marks. So if you guys are okay, then we can move forward and can start attempting. Before attempting, we should know about the question scenario. So we have read the requirements very carefully, and also we have discussed the relevant areas pertaining to this question which are tested in this question. So if you all are okay, we can move forward and we can start reading the scenario. NIC rates, even if you are forgetting the NIC rates, don't worry, these are given in the tax rates and allowances in your exam tables. No need to memorize these things. NIC rates are directly given. Okay, now please be with me, and we are going to read the scenario. And importantly, we shall be solving this question on the ACCA CBE practice platform. Don't worry, but while reading this scenario, I have to mark few things. So that is the reason I have opened up this question in the PDF format. But for answer purposes, I will be opening the accaglobal.com and we shall be attempting this question in CBE form. Now, read it very carefully by keeping all of the requirements in mind. If you want, you can take the snapshot. So even if I have switched to other file, so still the requirements are in front of you. So that's what important for us. You should assume that today's date is 8th June 22. Delimited required advice on registering for VAT, the corporation tax treatment of its expenditure on the research and development activities, and the after-tax cost of the remuneration to be provided to a key employee. The following exhibit available on the left-hand side of the screen provides information relevant to the question. Number 1 scenario. This information should be used to answer the question requirements within your chosen screen response options. And what is the scenario now? Dent Limited. First of all, let's talk about Dent Limited. This company will be incorporated and start trading from 1st July 22. Okay. Will undertake a research product to develop an innovative new process related to its trade. Fine. Will be a small enterprise, as one of you have asked this question, whether the status of the company will be given in question. Answer is yes. For R&D purposes, it is a small company, a small enterprise. Will prepare its first set of accounts to 30th June 23. If a business has started trading from this date, it means 12 months accounts will be prepared. Will make wholly taxable supplies to VAT for VAT purposes. Means a company is not being engaged in making exempt supplies or the reduced rated supplies. Will make wholly taxable supplies for VAT purposes. Fine. Next heading is Dent Limited budgeted income for the year ending 30th June 23. The value of trading receipts in the first few months will be low, such that Dent Limited will not be required to be compulsory registered for VAT until 1st April 23. That this date was given in the part A of the question. Dent Limited expects, however, to receive a substantial fee in April to June 23, such that it anticipates generating an overall taxable trading profits for the year ending 30th June 23. Simply means by adding this amount which is to be received in the next few months, the amount, the revenue threshold will be increased, and it will be more than 85,000 pounds for VAT purposes. And one thing, that if the revenue is increasing and meeting the threshold of 85,000 pounds, then a business is compulsory required to register with VAT. All of the delimited customers will be VAT registered for VAT. Keep one thing, that any information which is given in question that has some purpose with our answer. Nothing is given without any reason. So as it is simply clear written that all of the D's customers will be registered for VAT. So I shall be using this statement while answering my answer in part A. So be clear with one thing, that nothing is given without any reason. There is always a reason for the information which is there in question. Furthermore, yes, for surely there's a basic thing we should follow while answering part B of the question. Next heading is DANT Limited budgeted research and development expenditure for the year ending 30th June 23, and this value was also there in the requirement in the part B of the question, in the requirement B. An actual amount incurred is 353,000. Yes, this is 100% allowed. This amount is 100% allowed, but this company is a small enterprise for R&D purposes. An additional 130% of the eligible expenditure will be deducted from the taxable profits along with this 353,000. You know one thing, this 353,000 without any doubt it's 100% allowed, but we shall be adding an amount which is 130% of eligible expenditure. What will be that amount? Wait for the things. We shall be calculating that amount and we'll be adding with this 350,000, and we'll conclude the requirement of part B, which is to calculate the total expenditure allowed. The total expenditure, the amount of the deduction which will be available in respect of the research and development expenditure for its corporation purposes. As I highlighted here, that along with this amount, 130% of the eligible expenditure is added, and then the total deduction will be calculated. But how to calculate this part of the question? So that's the main marks gaining area. We have further few points. The budgeted research and development expenditure which incurred in the year ending 30th June 23 is a purchase of specialist equipment. Company also incurred some property costs, consumables, and staff costs. The above figures are exclusive, means net of VAT where applicable. The specialist equipment will be purchased second hand. The property cost entirely comprises heating, lighting, and water expenses. Okay. The staff cost includes a fee of 25,000 to an agency, which is VAT registered for the provision of an unconnected external contractor services for the year. Agencies involved, so it means this 25,000, 65% of this value will be allowed expense. The remainder of the staff costs wholly relate to the amount payable to or on behalf of delimited employees, including personal pension contribution of 14,000. Okay, fine. Including pension contribution totaling 14,000 if a company is paying the pension contributions for employee, so that is also an allowable expense. Don't worry with this thing. The property costs, consumables, and agency fees are incurred evenly throughout the year, means if there is an expense which is given for the complete 12 months, and if you want to calculate the expense amount per year, you can simply divide that amount evenly throughout the year, means you can take that amount and you can divide it by 12 months in a year. So it is distributed evenly throughout the year. On the next page, the scenario is with respect to Alina, which is a design engineer. A will commence employment with D Limited on 1st July 22. Fiscal year 21-22 starts from, okay, we are here and talking about fiscal year 22-23. Fiscal year 22-23 will start from 6 April 22 and will end on 5th April 23. But from this date, on 1st July 22, A will commence employment with D Limited to lead the research and development project. So you can see that employee is directly working in this project. Okay, A's annual salary of 80,000 is included in the budgeted staff cost figure. Fine. This amount is already included in staff cost. Fine. But on 1st July 22, at the date of joining, D Limited will additionally provide A with the following, none of which included in the budgeted staff cost figure above. Means these three things, any of these is not included in the staff cost. Only the salary has included there. What are these three things? Lump sum payment of 10,000 in recognition of her forthcoming employment means the things which are yet to be completed, the employment services which are yet to be performed in the future year. So that is termed as forthcoming employment. A second-hand computer costing 1,000 which A will have used, including significant private use for the first 9 months of her employment and temporary living accommodation for the first 6 months of her employment as detailed below. For if being an employee, if you're getting lump sum payment at time of joining the services, at time of joining the employment, so what will be the tax treatment? Quickly, your quick answers are really appreciated. What is the tax implication for getting this lump sum payment? What do you think? Is that taxable or exempt? Yes, fully taxable in the year in which it received. So it is basically received in this fiscal year. So the whole amount of 10,000 will become taxable. Okay. Company also provided a computer costing. Providing computer is a benefit, so it will result in a benefit named as asset usage benefit. And Mustafa, your answer is fine. Asset usage benefit is calculated at 20% multiplied with the cost of asset, but we have to month a portion as the employee would be using this asset for the 9 months in a fiscal year. So the cost of asset into 20% into 9 upon 12. Furthermore, temporary living accommodation for 6 months, whenever an accommodation is provided to employee, then accommodation benefit is also calculated, and it depends whether it's a rented property or employer owned property. And if it is employer owned property and if its value is more than 75,000 once purchased, then an additional accommodation benefit is also calculated. But if it is a rented property, and in the situation of rented property, we just simply do compare two things, the annual rental value or the rent paid by employer. So the higher of will become your benefit amount. So Alina, provision of temporary living accommodation, we have further few points with respect to the last one. What exactly are these? D Limited will pay rent of D Limited will rent a flat for A's use from 1st July 20 till 31st December 22. Okay. D Limited will pay the rental cost of 660 per month into 6 months. I don't know XYZ amount is calculated. The market value of the flat is currently 255 to 25,000 and its annual value is 28,000. When the property is a rented property, we are not bothered to know about the market value or the cost of the property because it's not the employer owned property. So why we are looking at the value or the cost of the property? Because it is only considered when it is owned by employer, and then we check whether the amount, the cost of this property is more than 75,000 or not to calculate additional accommodation benefit or not. But for the time being, in this situation, this statement is somehow irrelevant for us. However, the annual value is relevant for us because whenever there is a rented property, when there is a rented accommodation, so rented accommodation benefit is a taxable benefit, and it will be the higher of rent paid by employee, rent paid by employer, not employee, sorry, it is rent paid by employer, or the annual value. Annual value is directly given in question, that is 2800. Can you please tell me rent paid by employer is 660 a month and given to employer for 6 months, so that is becoming 3960. So which value is relevant for us? Based on this discussion, 3960 is relevant for us. So we have read the scenario very carefully. Now I'm going to open up the same question on the ACCA practice platform. So now we can start attempting, start solving, start answering all of the requirements one by one. It's advisable to read the requirement and then scenario and then to plan your answer before attempting part A, B, or C, because till the time you haven't read the question and requirements, so how you can start answering, because many requirements are linked with each other. Yes, we shall be sharing all of the PDFs with you guys, and effectively the PDF used by other tutors or Kambarasa will also be shared, don't worry. Okay, now I'm just opening the ACCA practice platform question, which is practice exam 3, question number 3, as we have discussed. Can you see my screen? Is it visible for you? Okay, so basically it's practice exam 3 according to the Finance Act 21, and I'm using Navigator to move towards question number 3. I'm using the Navigator and moving towards the question number 3. Same things which we have discussed is in front of you. It's a scenario, requirements, and scenario. All of the things are in front of you. So you would be opening all of these at the same time in exam question, in your real exam, and one of you basically asked a question. So where from we can get the NICs and the tax rates and allowances table. So on the left hand bottom, you can see there is an option help or tax tables. So just click here, and there are 3 tabs: workspace help, tax tables, exam instructions. So if we click on tax tables, it's like 4 to 5, like 5 pages information is in front of you. So where from you can get all of these things in case if you are not remembering. So NIC's related information and capital gain tax rates and all things are available here. But okay, as we have read the question and the requirements carefully, I would suggest you, I would request you guys to read these 2 things pertaining to VAT and related requirement. I would appreciate if you please do write both again, so then we can start answering this part A of the question. VAT related information is in front of you, and also requirement is in front of you. Just take 2 minutes time to read these again, so then we can start answering this part of the question. Should we start? All right, my dears. So I have just opened the word processor for answering part A of the question. Just click here, and as we are going to tell about the VAT implications, mark a formal heading, VAT implications for compulsory registration and why the voluntary registration is beneficial. So we have marked a formal heading. If in case you get time, you may also do these things for presentation purposes, but I guess um, during sitting in real exam, you would not be thinking about doing these things. But in case if you have enough time, so you may bold or highlight your headings. So as we are talking about part A, VAT implications for compulsory registration and why the voluntary registration is beneficial. I would be answering all of these things into step-by-steps. And for okay, what is the first point? Pre-registration input VAT can be recovered if delimited registers for on which date? I told you don't write the journals in concepts. You have to link the things with the scenario. What is a benefit? What are the implications for compulsory registration? The first implication, pre-registration input VAT can be recovered if delimited registers for VAT on 1st April 23. The next thing is pertaining to this point, for claiming pre-registration input VAT with respect to, as we discussed, two things are there. Pre-registration input VAT condition for goods is different. Pre-registration input VAT conditions for services is different. So we shall be discussing, we shall be writing these 2 points separately in the form of paragraphs. For claiming pre-registration input VAT with respect to goods, at time of compulsory registration, Dent Limited, I'm not going to write the complete name of the company, D Limited acquired which things have acquired by the company in the year end. As we have studied, as we have read the scenario, 4 different costs incurred. Company is doing a research, and for doing that specific research, company has basically purchased special equipment and also has incurred multiple 3 other costs, which are property costs, the consumables, the staff costs. So we are talking about goods. A simple and sweet question: what goods are here in scenario? What goods are here in scenario? Company incurred expense on 4 things: specialist equipment, property costs, consumables, staff costs. From these 4, what are goods? So I have to incorporate the relevant area where I'm discussing about the pre-registration input VAT with respect to goods. Can you please identify what are the goods in these 4? Perfectly answered, Muhammad Faisal. Specialist equipment is a good, consumables is another good. So there are 2 goods. So I'm actually giving you the footsteps that how you can link the available things while answering your question. So don't write the journal points. As I'm going to discuss about the pre-registration input VAT with respect to goods, I have to link the things with the goods. There are two goods purchased. One of them is the specialist equipment. Number two is consumables. So for claiming pre-registration input VAT with respect to goods at time of compulsory registration, delimited acquired specialist equipment and consumables within the last 4 years prior to the registration. In effect, there is only 1 year has now ended, but we are elaborating the rule and also linking the rule to the scenario. So delimited acquired two assets, two goods, specialist equipment and consumable within the last 4 years prior to the registration. But delimited can only claim input VAT pertaining, by the way, before writing the answer, just giving you an idea, if these two assets are purchased prior to the registration and the general rule was the goods which are existed at time of registration, on those goods we can claim the pre-registration input VAT. From these two, on which we can claim pre-registration input VAT, whether on both or from any one from these two. What's your suggestion? What's your thinking? Consumables, by its name, to some extent you can understand these are consumables. So if anything has consumed till the time of registration and is not existed at time of registration, so we cannot claim input VAT pertaining to the consumables. So it means as far as the goods is concerned, from these goods we can only claim input VAT with respect to the specialist equipment, because this specialist equipment is existed at time of VAT registration, and consumables which have been consumed in past and not existed at time of registration, to that extent we cannot claim any input VAT. Are you guys okay with this point? So but delimited can only claim input VAT pertaining to equipment as it is existed at registration time, no input VAT can be recovered in respect of consumables which have been consumed prior to the registration. In effect, registration date as per the scenario is 1st April 2023. So before this date, if company has consumed anything, cannot claim input VAT with respect to that consumables. So only the specialist equipment is available, is existed at time of registration. So if any VAT is paid for purchasing that asset, can recover input VAT. Writing third para with respect to services, input VAT pertaining to services. A company got VAT registration on this date, but business started on 1st July 22, preparing accounts till 30th June 23. It's a complete 12 months time period, but got VAT registration on this date. So what will be the rule for services? Can we claim any VAT pertaining to services from the commencement of the business or from the within last 6 months of this date. What will be the relevant date here then? No, from, yes, 6 months from the registration date, the previous 6 months from the registration date. We are talking about pre-registration input VAT as we have started our discussion. So there's an advantage if a business is getting VAT registration on this date, and if any services which acquired within the last 6 months prior to the registration, on such services pre-registration input VAT can be claimed. So can you please tell the date from where the company can claim the input VAT? Just count the 6 months back date from the registration date. Waiting for your answers. Input VAT pertaining to services can also be claimed on the services which acquired within the last 6 months prior to registration, effectively delimited can also claim input VAT on services which acquired from October 1st 22 till 31st March 23 as pre-registration input VAT. So we have answered in all aspects. What are the VAT implications at time of compulsory registration? The first implication, company can claim pre-registration input VAT, and within this pre-registration input VAT, we discuss the concept of goods and services, pre-registration input VAT for goods and pre-registration input VAT for services. So we have partially answered the part A of the question. Second requirement is to tell about the voluntary VAT registration advantage. So now starting this thing, if delimited registers for VAT from commencement of business, what is the commencement date for business? As evident from scenario, that is 1st July 23. Then if company registered with VAT since the commencement of the business, then what will happen? Then the entire amount of input VAT can be claimed on both the goods and services acquired since commencement of business. As you can see in the above para, we have written that the services acquired within this time period, only to the extent of these 6 month services we can claim input VAT. But there's the advantage of the VAT registration. If business gets VAT registration at the very first day, then at the month of July 22, August 22, September 22, for the time being, we are not allowed to claim input VAT for these 3 months, July till September 22. But if business gets VAT registration from this date, then for surely the entire amount of input VAT can be claimed. Furthermore, as I told you, nothing is given without any reason. So somewhere it was written as all of these customers will be registered for VAT. Now I'm using this statement, over here while answering the advantage of getting voluntary registration. Furthermore, delimited is also if company gets VAT registration since this time, what will happen then? Furthermore, delimited is also required to charge VAT. Then from 1st July 22, and this will not be a problem for its customers, because as they are also VAT registered and therefore can claim any VAT charged by delimited. If the customer in front of you is not registered with VAT, that customer cannot claim VAT from HMRC. But as if delimited will start charging VAT, it will not be a problem for the customers of the business, because all of these customers are also VAT registered customers. So furthermore, delimit is also required to charge VAT from registration date, and this will not be a problem for its customers, as you're also VAT registered and therefore can claim any VAT charged by delimited. So we are done with the part A of the question, and these are easy 6 marks. If you have any question or any clarity in mind, you may please ask. And if you are okay, still do let me know. Then we can move forward and can start answering part B of the question. I'm waiting for your replies. Small size company, yes, D is a small size company, but for VAT purposes, no need to discuss this thing, because we have a detailed discussion in part B of the question. Don't worry, I would be taking the small size entity thing in the part B. All right, moving forward, part B. In part B, what we are required to do, we have to discuss corporation tax relief, in respect of research and development expenditure incurred by a small company which is in effect then limited in this situation. So that's the basic thing which we are required to do, as while reading the question and the scenario and the requirement, I have guided you that what are the implications for small companies which is incurring research and development expenditure. Now it's time to formally write the answer. I'm starting first thing for R&D purposes. For R&D purposes, D Limited is a small company and thus can claim an additional 130% deduction in respect of qualifying eligible. The things which are important, I am using the first word as capital, first letter as capital. Qualifying eligible expenditure Just to make you realize these things are important to notify. For research and development purposes, D Limited is a small company and this can claim an additional 130% reduction in respect of qualifying expenditure incurred, which is directly attributable to research and development activities. In the next point, additional, we are going to now discuss what exactly is this. What is the amount of this? Although the actual expense is 535 or 553,000 that is given in the requirement, but on which amount we have to calculate the additional expenditure. So in the second para, additional 130% deduction on eligible qualifying expenditure for R&D is calculated as, first of all, if we talk about specialist equipment, as I told you, specialist equipment, that is an old asset, that is not a new asset. So this value will not qualify for 130% additional expense. Why? Because it's not a new asset. Number two is property cost. Property cost is basically for R&D activities, 46,000 is the value. Third, we are incurring consumables. Consumable values is 12,000. Furthermore, I'm writing staff costs excluding agency. What are the staff costs excluding agency? Can any one of you please tell? The total staff costs are 185,000, of which 25,000 is for agency work. So if we exclude that amount, so differential staff cost is becoming 160,000. That is all allowable because from 185,000 we have an excluded amount of 25,000 which is pertaining to agency. Don't worry, I would be using this thing agency cost. Agency cost will be allowed 25,000 into 65% will be allowed and it would be considered for qualifying expenditure. Amount is becoming 16250. If we add all of the values, the sum will become 46,000 plus 12,000 plus 160 plus 16250. Any one of you can please tell me the total amount, which is the eligible expenditure for research and development purposes, on which 130% is yet to be calculated. But can you please tell me the sum of all these amounts? Two, 3, 4, 2, 5, 0. Thank you, Zara. 2, 3, 4, 2, 5, 0. This amount is considered as 100%. So this is to be divided by 100%, multiplied by 130%. So what is the 130% of the eligible expenditure? What is the final amount calculated? This amount is to be considered as 100% amount. So amount given divided by its percentage multiplied by required amount percentage. So 234,250 divided by 100 into 130. So that is becoming 304,525. 304,525. In the next point, 304,525 is being calculated as additional allowable deduction and would be added to. Now we can write this point as well. The amount is calculated 304525. 304525 as while we were discussing. Let me show you the question from the PDF. I told you an amount will be added over here. So we have calculated that amount, that is 304525, and the sum of these two will be the total deduction, and total deduction is the sum of these two. What is the sum of these two is becoming 657,525. 657,525. So I have to annotate these points as well there. $304,525 is being calculated as additional allowable deduction and would be added to actual expense of $353,000. Last point to conclude, resultingly, a total deduction available to company, available to Dent Limited for the year ended 30th June 23 is 657,525. How we did calculate? By adding 353,000 plus 304,525. So and the total allowable deduction is being calculated as 657,525. Are you guys okay with all of these calculations and discussions? Would really appreciate if you please write yes or no, and in case if you have any query question, would love to answer your queries as well. All right. Requirement C, I'm solving requirement C into two halves. The first half is to state the tax implications, state the income tax implications of the receipt of the lump sum amount for Alina. It's basically the tax implications for employer for getting lump sum amount of 10,000 pounds at time of joining the employment. So I'm going to divide requirement C into two halves, and for requirement C, the first thing which we are going to do now is to write the tax implications for Alina on receiving lump sum payment of 10,000. So that's the first thing to do. You all have answered this part. Alina joined employment on 1st July 22 and also received 10,000 as lump sum payment, which is fully taxable in the fiscal year 22-23 as it pertains to future services to be performed by her. So by writing this thing, you would be getting 1 to 2 marks. Now, the part second half of requirement C, what is second half? Let me show you the requirement first. Calculate the after tax for delimited after tax cost for company in respect of these three things. Number one, a lump sum payment. Number two, provision of computer. Number three, providing the living accommodation to employee for this year end. So for second half of requirement C, let me mark the relevant heading after tax cost to Dent Limited in respect of lump sum payment. Number two is provision of computer and living accommodation. So these things are to be discussed as second half of the requirement C. As there are three things yet to discuss in this situation, so I'm further categorizing and going to discuss all of these in isolation separately. So the first thing is lump sum payment. So another heading is marked lump sum payment and the tax implications for company. The amount paid, as I told you, if an amount is paid by an employer to employer, so that is an allowable deduction, but this amount is cash, so it would be considered as gross cash earning. On gross cash earnings, employers are also required to pay class 1 NIC. If you don't forget these things, you will be getting full marks, right? So the amount paid, is considered as gross cash earning, and delimited also has to pay class 1 NIC. Which one NIC is it? Class 1 employer NIC of, it will be 1380. How? Because if a gross cash earning amount is 10,000 and employer NIC percentage is 13.8, the amount paid is considered as gross cash earning. Sir, why you are not considering the first exemption, the first exempt amount of the NIC? Why I have ignored altogether the amount which is for employer? If we look here, if we talk about class 1 employer NIC, for the first 8840 is simply exempt and the additional amount is charged at 13.8. Sir, why you have not considered this thing? I'm expecting the answers from your side. What you think? Why I have not deducted 8840 from 10,000 and only charging 13.8 a differential? Why we are not doing like this? I'm expecting an appropriate reply from you guys. Faisal, even the income is more than 8840, for example 10,000, but from the 10,000 we should take 8840, but why we are ignoring this 8840 here? The reason is simple. In this part of the question, okay, it is written as, now the answer is given by Eva. Yes, Faisal, now your answer is fine because we are talking about additional now. Okay, you guys got the answer now because this 8840 and XYZ amount is covered by normal income. That is salary. That is normal gross cash earning is 80,000. So this in the tax rates and allowances, this 8840 is covered by the normal employment income, which is 80,000 salary. We are talking about additional, so we have to think about the additional implication. So on the axis, on the additional of 10,000, directly 13.8% would be applicable. So that is the reason we all together have ignored the 8840 exemption of the NICs and directly calculated an amount of NIC which is 1380. Hence, what will be the total cost in this situation? The total cost will be 11380. How we did calculate? By adding both the 10,000 and 1380. And as Alina employed to lead research and development project, therefore an additional 130% of 11380 will be deducted. Sir, where from you are taking all of these points? We are not getting this, don't worry. As it is mentioned in the scenario, she has joined employment to lead the research and development project. So if any amount which is directly attributable to research cost, sir, it is already included in the staff cost. No, in staff cost only the normal salary is included. On 1st Jan 22, D will additionally provide A, and none of these are included in the budgeted staff cost. So this 10,000 has not added in the normal staff cost. So if you are talking about this 10,000 additionally, so we have to cover all aspects with respect to this. As this 10,000 is given to a person who is employed at company to lead the research project, so this expenditure will also be qualifying expenditure for research and development purposes. So therefore an additional 130% of 11380 will be deducted, which is, can you please tell what will be the amount? By the way, are you guys okay why we are considering this 11380 for R&D purposes? Because it is not already included in staff cost and person is directly related to research project. So on the amount which is pertaining to the person, additionally, we are also considering the same amount for R&D purposes. Are you guys okay? Are you guys getting this point? That's very much important. And most of the students normally ignore such points because they are unable to link the things with the actual scenario. So if on this amount 130 of 11380 will be deducted, which is, can you please tell me the relevant amount? 14794, and this 14794 is basically calculated 11380 divided by 100% multiplied by 130%. So this is how this 11380 divided by 100 and multiplied by 130%. So this is how 14794 is calculated. Why we are considering this? Good question. Because paying salary or cash to employee is a gross cash earning, and on gross cash earning, let me show you it from the PDF file. Over here we discussed a point that when a company employ a person, company has to pay class 1 employer NIC. Class 1 employer NIC is based on the gross cash earnings. So salary paid to employee or lump sum payment given to employee is a gross cash earning. So that is the reason we are considering class 1 employer NIC. Hopefully now you got the relevant point why we are considering 1380 here. Are you okay now? Finally, the total deduction will be the actual amount plus the 130 additional amount. The total deduction will be 26174. And how we did calculate it? The actual expense plus 130% of the expenditure, 14794. So if you simply add these two things, the actual expenditure plus 130% of the actual expenditure, so the total deduction is becoming as 26174. Okay, I have already told you this thing because this person employed by company and this person will lead research and development project. So if any amount incurred by a small company, and if a small company is doing research and development, so if any amount which is directly pertaining to the research project, on such amount there is an additional 130% expenditure is incurred, is allowed to deduct. So this person is employed by company for this research product. So if any amount is given to that person, so this same amount will also be qualified for 130% of the additional expenditure for R&D purposes. So as far as we attempted in the part B, this 234250 was the eligible qualifying expenditure and it qualified for 130% additional. So same case over here. If a company is giving 10,000 additional amount, so the 10,000 and all related thing will also be qualified for 130% additional deduction. Okay, good to know that you are now comfortable with this point. All right. So the total deduction for the company is becoming 26174. Let's talk about provision. Provision of computer, as company is providing a laptop computer to person. So computer cost is 1000 and also delimited. By the way, when a company would be giving any benefit to employee, company also has to pay class 1 employer NIC on the taxable benefits amount. So keep this thing in mind and let's talk about few things. Computer cost is 1000 and delimited also has to pay class 1A employer NIC on the amount of benefit, which is, can you please tell me the NIC amount? Which is, how to calculate? 1000 is a cost of asset, 20% is a asset usage benefit. To be month apportioned, asset is given to employee for 9 months, and class 1 employer NIC is always calculated as 13.8%. If you solve this fraction, can you please tell me the NIC amount on the benefit provided? 1000 into 20% into 9.12 into 13.8% for NIC. This percentage is for NIC. This percentage is for asset usage. 9.12 against month portion. By solving this fraction, what is calculated as NIC? 20.7, make it round as 21. Providing computer will result in total deduction is 1021. How? 1000 is the cost of providing computer plus company will has to pay class 1 employer NIC on the benefits amount. So total deduction for company would be available 1021. Let's talk about the last one. providing the temporary living accommodation. What do you think? What should we do now? Dent Limited would be paying rental of, I guess you told me the value while reading the question, 660 per month value, and company is providing 6 months rent, 3960. And there at that time we decided the higher amount is 3960 as compared to the annual value. And also class 1A employer NIC on the amount of benefit provided. As we did calculate the amount of NIC on the benefit provided in the previous scenario, now you have to calculate again the benefit class 1A employer NIC on the amount of benefit provided, which is, can you please calculate, which is, what will be the amount of the benefit? 3960 is the benefit amount, on which class 1A employer NIC is calculated as 13.8%. So what is the amount of NIC? $546. Okay, 546 will be the deduction for the company. Total deduction will be, or total deduction is 4506. How? The actual rental paid 3960 plus also the company has to pay 546 in respect of class 1A employer NIC. So the sum of these two will be 4506. Let's conclude. If you check, as I told you, we have to arrive till here as providing benefits, salary benefits to employee, it will result in increase in cost. At the same time, when this cost will be deducted from the profits will go down. If profits will go down, there will be saving in income in corporation tax liability. Resultingly, the differential of these two, if we compare these two values, so after tax cost for the company will be calculated. So we have to arrive till this value. How to calculate this value? Now, if we talk about, let me mark 2 to 3 headings. If we talk about total cost incurred, and the other heading, total cost for tax purposes deduction. So what are you doing like this? Why you are dividing it into two categories? Because in the first column, we will be talking about the actual cash outflows, but in the second column, we will be talking about that which cost will be deducted in the calculation of taxable profits. Because if let me show you, we have in part A, we have in total company have outflowed an amount of 11380, but for taxation purposes, the total expense will be 26174. So that's the difference in between two values. So that is the basic actual cash flow outflow amount is 11380, but the deduction amount is 26174. So that is the reason we have divided it into two columns, the total cost incurred and the total cost for tax purposes deduction. In case of lump sum payment, what is the total cost outflowed? 11380, but for tax deduction purposes, as per the concept of 130% additional, we calculated an amount of 26174. If we talk about second, providing of computer, what is the cost incurred? The actual cost incurred was 1021. So I'm taking the same figure over here, 1021 And the same amount can be replicated over here because this amount will remain same as for the actual cash outflow, and the total expense for deduction purposes both are same. And third, accommodation for total cost incurred, we calculated over here. The total cost incurred was 4506, and the same amount can be written over here for tax deduction purposes as an expense. We can deduct 4506. Can you please tell me the sum amounts? The sum for column 1 is 11380, 1021, 4506, 16907. All right, and over here the sum is 31701. Please make me correct if I calculate it wrongly. 31701. Okay, fine. Next point. 31701 is the expense amount and will reduce profits, hence reduction in corporation tax liability by if these expenses will be deducted from trading profits, and if the tax rate is 19%, so what will be the tax saving by deducting 31701? What will be the reduction in corporation tax liability? 6023. Last point to conclude. On one hand, Dent Limited incurred a cost of 16, I'm talking about the first column cost, 16907. On one hand, D Limited incurred a total cost of 16907, but on other hand, D Limited has corporation tax liability saving by 6023. Hence, total after tax cost is basically the sum of these two values. Company has incurred the total cost like this, 16907, as in the first column, but due to the second column expense deduction, company would be getting a tax saving by 6023. So the total after tax cost is, you are telling it as 10883, 10884. How we did calculate it? By taking actual cash outflows and reduction in tax liability by 6023. So resultingly, 10884 is calculated as total after tax cost for the company. So that was a requirement under, that was required under requirement C. Hopefully, you got all of these points as discussed. I tried my best to make you clear in all aspects, because I didn't plan 2 to 3 questions to be attempted in 2-hour session. No, my plan was to go with one question, but do discuss the question and briefly, and do cover the question in all aspects. So hopefully I have achieved my objective or not. So you guys would be telling me whether we have achieved our objective. As I told you, I discussed the agenda of this session at the start of today's class. So want to know about your feedback. So based on your feedback, I can plan for tomorrow's session. So whether this strategy is fine or not. So first of all, we discuss a basic thing. We recall the area which were tested in question. Then after a quick recap, we read the requirements, and then we read the scenario, and then we attempted the question. So thanks for your feedback, Faisal. What about others, please? Your feedback is basically very important for us, because based on your feedback, I shall be planning for next session. Okay, thank you, Shoker, and all right. Majority of you are fine with the things as we operated today, and I'm going to end. We get a background of topic, then answer. Thank you, Esther. And inshallah, I would be planning tomorrow's session based on your comments, on your feedback. Good to know. All right. Appreciated your comments, and thank you, my dears. Thank you for your time. Thank you for joining this session. Um, I have written my number in the PDF. So in case if you are not added in the group, or in case you haven't received any files, so you may contact with me. I will ask my coordinator to provide you all the related stuff. Thank you. Thank you all. Inshallah, see you tomorrow. Take care. Bye and Allah Hafiz. All right, my dears. Take care. Stay blessed. Goodbye.